All right. Good morning, everybody. We still have data, and the data apparently is enough to be concerning because we're looking at hedging activity this morning. We got a market maker move. The base case at the moment is that we're going to continue the pace. Spot Gamma has been adamant about that 6,000 level. And if we consider an overshoot into the COG line, then we're looking at 6011. After that, if we keep the pace, we'll grind higher. Otherwise, we're looking for a chop sideways, keeping the gains that we've already made and not really looking to give anything back, right? A little bit of pirate speak there. So that's what we've got. The only concern is that market maker move. Going to need to keep our eye on that to see after the 8:30 event if it starts to decline or not. If it doesn't begin to decline after 8:30, then we've got the 10 o'clock event. That's just the way it goes, right? One step at a time. So if you look at Finance Juice, they do a morning briefing on there, and this is what they had on the docket: Canada, and then we've got the UMIDG. So one of these two, very likely, is the cause of that hedging activity that we're seeing this morning. Otherwise, markets around the world, Hong Kong is getting a beat down because they came out with that stimulus that we were all looking for, X trillion dollars, and the market said this is a joke, didn't like it, wasn't enough, wasn't interested in it, so they're taking a little bit of a beat down. If you look at the U.S. markets, we're basically flat. We don't have anything here on either side. NASDAQ is the weakest. Dow up, not even 0.1% yet. So we're a market looking for a reason. And this flatness ties in with, hey, they're hedging this morning. This afternoon, we're going to get some remarks from the Fed, and that'll finish us off, right? If I remember correctly, this is just some kind of luncheon thing. There'll be some Q&A, but it's not expected to be anything impactful. So because there's Q&A, you always want to be a little concerned. They can be taken out of context. They can misspeak, say something that they didn't intend to say. They can be, misunderstood. They can move markets even without intending to move a market. So if you got somebody out there chipping their teeth, pay attention to it, right? It's kind of the long and the short of it. We also have Bowman at noon. That should wrap us up. Now, next week, we're going to get some insight on lumber and that warm housing market, getting numbers out of Home Depot. It matters, right? It's kind of a big deal. I'm waiting on Spot Gamma this morning because the call wall and the put wall are really close. We're kind of squeezed or compressed, pinched. Pinched is the word I'm looking for. We're pinched in between those two levels. And, it's been a while since we've seen that put wall rolled so aggressively up against us. Now, when I was reading the overnight Spot Gamma report, they said the put wall that they picked was basically just because they had to put a put wall on there, right? People would throw a bit if they didn't put one on there. But this one wasn't a very good one. It didn't have a lot of structure to it. It was just determined to be the put wall from the lack of call gamma there. So read the overnight founder's note to get a little bit of insight on that put wall. It kind of clarifies why it's right up against us like that. It also kind of implies that if we test it, it's not really going to be all that useful. I did mention they're hedging. This is not my opinion. I'm not guessing. We can see it right there, the market maker move. If you don't have that indicator, you don't need it. Just go look at the futures and look at the implied volatility average on the side. So here, the 0-day, 9.4. The next expiration out, 8.9. When the front number is higher than the next number out, you have a market maker move. That's the way it works. When we see that market maker move, we know that they're hedging. We know that they're trading the out of the money options in the front end to protect themselves from an event now, today. They're always hedging, right? It's not like they just run around unhedged and then today they decide to sally up. They're getting extra protection today for something. We're going to just assume that it's because of the events that we looked at that's on the docket today. If it's not, then it won't decrease after 8:30. It won't decrease after 10. It'll start to decrease whenever some event that we're not seeing comes in yet. Now, I went through these 4 websites like I do every day. 3 of these have events listed, and it's not all of them. You could go to every website out there trying to get all of the events for the day. You won't get them all. There's US events, and then there's global events, and you just won't get them all. There's equities, agriculture, commodities. There's just a ton of events. So you will never get them all. Don't waste your time, right? Highlight the key ones and then just watch the clock. Government's lazy. Those events are going to happen on the half hour, on the new hour, maybe on the quarter hour, but definitely just watch the clock. Half hour, new hour, you're going to get flows. You're very likely going to see activity from an event, whether we knew there was an event or not. So watch that market maker move. See if it continues to grow through the morning. And it's time-based. It's going to die by the end of the day either way. So at some point, the clock is going to be ticking and it's going to begin to fade, say, after lunch. But we want to see it fade before that based on the clock and on the docket that we were looking at. The ADR levels for the day, since we're basically flat, we haven't gone anywhere and we haven't done anything, then we don't have much edge to go towards one side or the other. We're underneath the VWAP and we're closing this little liquidity gap, but really we got nothing on any sort of edge to project to one side or the other. We're at that big round number, 6,000 on the ES, but we need the SPX at 6,000 with an overshoot into 6011. We're not there yet. So we had a missed daily pivot on Wednesday. We had a missed daily pivot on Thursday, and all of that just ended. We tagged our daily pivot this morning. We're considerably expanded from the weekly pivot. At some point, we're going to get overbought. I don't really like the phrase, but we're going to get too far away from that weekly floor pivot. This isn't too far yet, in my opinion, but there's not much left to it. We could get a little bit higher. The worry is like a bungee cord in the wrong direction, right? If we get too far away too fast, we'll snap back in the other direction. To the downside, we've seen price expand, 6% away from this thing. But on the upside, we don't normally get that far away. 3.5, 4.5, that's more in line with how far we can get from this thing before we snap back. And at this point, we're near 3.5%. So we're getting close, but I wouldn't I wouldn't try to trade it just because, right? You're not looking for mean reversion this morning based solely on, gee, I think we went too far. Try that and you're going to get run over. The week's profile, as you can see, we've left everything behind. That's not hard to figure out. We've got these high volume nodes. We're building one up here. So we hit like a ceiling. If it had been at the lows, we'd call it an iceberg. We're holding and building out structure here. If that fails, then we'll get back inside this value area. Those value area lines aren't going to be any sort of support or resistance. So the VAL and the VAH, value area high, value area low, they're not going to be useful. The point of control is all the way down at the bottom, 5750 area. If we break that 5950 area, the high volume node right in here, then we've got a pretty good shot of coming back down. I don't think that this point of control from last week is going to help at all. You know, even a staggered layer of those didn't help on the way up, right? It didn't hold us back at all. We cut right through them. Nothing there. We still got net buying. At the very least, we're not seeing net selling yet either. That's not just in the ES, right? That's in the NASDAQ. If we can break that silly little footwall there, then we've got the ADRs, the red lines, which are extra spot gamma levels, and then very far below us, we got the 3-week, the 10-day, 20-day, 10-week, zero gamma, volatility trigger. We've got a lot of structure down here. Even if we do pull back some, we're not looking to give back a lot of this move. That's a really important distinction between the two. With yesterday's small range, 59.82 is the halfback. Let's keep it above that. If we do manage to get below that halfback, then we'll run it down to yesterday's open, which is really close with this close. So 59.66, 59.63, there's your zone, right? Little 3-point zone. That's where we would look to find some structure at that point. 82 to 62. That's not bad. 10-day, 30-minute volume profile. We talked about it the other day. We're not looking to see this point of control move anytime soon. Even if it does move, it's likely to move down. We've got all this structure down here to deal with. So we need to stay where we're at and build a lot of this out, or we're going to see the point of control move even farther away from us, not towards us, not helpful. Five-day, 5-minute. We've got 2 VPOCs. If we were to make moves to the downside, we're very likely going to interact with those. We'll magnetize towards that 59.32. But we got to start making moves to the downside to even begin considering that. For yesterday, we've already hit that point of control and we bounced off of it. So it's not a VPOC. You could still mark it as a POC. Most of the books that talk about the volume profile will mention that that's a good idea. Carry forward the point of control. It just wouldn't be a VPOC, right? Because we've already hit it. So it's been touched. 59.92 cog line. For me, I don't need to carry this line forward. I've got enough pivots of my own. Plus, that's a cog line. I would be looking at that level anyways. So for me, I don't need it. If you don't have enough pivots, then, maybe follow what the textbook says, carry forward the value area high, low, point of control. All right, it's Friday, so we get a look at next week's range. Now, it's not set in stone yet, right? But it's a preview. After 4 o'clock today, it'll set itself in stone. And we really don't have a whole lot to evaluate it off of because this week's range was so out of whack, right? That's why we had these levels drawn here. The one on SPY, the one on the SPX, the QQQ, all of those were fine. It was just this one on the ES that was so broken. Now, if we compare it to the week before this week to kind of get a level of understanding of what we're looking for next week, well, you can see next week's really compressed. Got to be careful with that kind of concept. These ranges are derived based on time and volatility. Well, if we have 5 days in the week that I measured, and we have 5 days in the week that I just stuck it on, then both of them have the same amount of time. The only thing that's different is the volatility. A narrower range implies less volatility. The trick is big events reduce volatility. FOMC is a volatility suppressing event. I know it sounds crazy because if you've traded FOMC, you know when they announce it goes all over the place. It's wild. But leading up to the event, markets generally go sideways and get compressed and wait on that event. That's literally the very definition of suppressed volatility. So when we see next week with a very tight range and we think, oh, wow, look, not a lot of volatility over there. Yeah, be careful. What's next week? Non-farm payrolls. Off the top of my head, we'd have to look at anything beyond that. But that's the question we want to answer. If it's a very narrow range like this, the base case argument is the market is pricing in a pause while we wait on some economic event next week. We're 1.8% above the 10-day. It's a little high, but if I stop my mouse at that spot, you can see that we've gone higher than that. It does begin to get us into a state of overbought conditions. The thing is, that doesn't mean we have to sell off. We can just stay there and the 10 will come to us. So when we think about overbought, we're better off using a different word, different language. We're looking for a correction here. But we can get a correction in time or we can get a correction in price. A correction in price would be us just chopping sideways and giving that 10 time to catch up to us. A correction in price would be us reversing and moving back towards the 10. Now we can do both. We can slowly grind lower while the 10 is coming up to us. So with mean reversion, we are looking for that correction. We just have to see which one it's going to be. When we take a look at the weekly, 3.6% above the 10-week. That's a bit much. We've been higher than that, but this is usually where we begin to stall out. The thing is, I can point to areas where we've got to this level and we didn't stall out. We just kept on going. Markets can stay juiced way longer than you think they should, right? So until we actually get signals to the contrary, you want to keep running with what we have. Don't fight the flow. I know this is a really loud chart. Got nine sectors here. The thing to look for is the little tag that's in the corner. So all of these are a daily chart. This 5-bar change is a 5-day change. Blue is positive, orange is negative. So when we look at the 9 sectors, we've got 2 that are negative. And they're not negative by very much. 0.5% and a little more than 0.25% in staples and utilities. Otherwise, everything else, we got energy over 5.5%, technology 6%, financials 4.5%, consumer discretionary 6%. I mean, we're stretched, right? Which is why you don't want to stand in front of it. If it's still going, it can still go. It's like when you jack your car up to 90 miles an hour and you take your foot off the gas. It doesn't mean you're going to stop. You're just going to slow a little bit. So until we see this starting to actually go the other direction, don't just jump in front of it thinking we've gone too far, too fast. There's some really easy metrics that we can use to start looking for those reversals. Doesn't have to be complicated at all, right? Take something as simple as yesterday's range. Let's use something a little bigger. There we go. Got the RTH all by itself, which will give you a little more discretion than measuring the entire thing, since, you know, we had a slow grind. So just the RTH itself. You can also just measure our own Globex range. Nothing fancy, just run it from high to low. Now you've got some structure to it. If you're looking for a short, got to get under that halfback first. Then target the RTH open. Beyond that, get to the RTH low of yesterday. Then focus on that Globex low of yesterday. Level by level. But you got to kick it all off with getting underneath that halfback. Now, I'd rather short from the highs than the lows, right? I don't like to short from the hole. And we're already working our way back up. So if we reject that 60-11 cog line here, we fail in this zone, I'll happily short it off of that. But I want to see it reject off of that zone. I wouldn't run it as a base case argument that as soon as we get up there, we're going to reject and fall. I wouldn't do it. If we add something like the 111 and the 1236, then we've got our LZ, liquidity zone, and then we've got the opposite candle color up here. So until we get through that 111, then we can maintain this theory that we could chop sideways and go into the close happy and content and hold these levels. If we get through the 111, we got to play the expansion. Simple enough. Now, China really disappointed with that stimulus. So we've got a lot of those names down. We can see the K-Web, it's still up, you know, more than 6.5, but it's down this morning almost 5%. The next name on the list is also China EEM. I mean, that's basically China again. Then you've got the miners, solar, more gold, metals and mining. It's a lot of what we saw yesterday, right? Just flipped back in the other direction. Metals and mining is still up 9%. It kind of needs a little bit of a pullback. Take a look at the other side of things. We got nat gas. That's a joke. Bonds. Well, it's about time. And from there, none of these are up 0.5% under bonds. So we don't even look at them, right? So we don't have much. In the last 2 days, when we would look at this, we had nearly every single sector on the month. We got nothing, right? Nat gas. 10% of the S&P is down 0.5%. 4% of the S&P is up 0.5%. There's our lumber plays, Home Depot, Lowe's, and then Bank of America, which nothing there, right? NASDAQ, 8% of the NASDAQ is up 0.5%. We're not seeing all those semiconductors in the Mag 7 and the big dogs that we need. So if we're going to get a rally today, a continuation of the run that we've been having, then we need that participation, right? Here's all the semiconductors we were looking for. 21% of the NASDAQ is down 0.5% or more, and it's loaded with semiconductors. We can't rally today if we don't have these. The only other way that we could rally if we don't have the market with us is if we get some zero-day flows, right? There's always the options world. We can get that zero-day flow coming in, or of course, news. But if we're looking for that rising tide to lift all boats, well, the tide is going out, not coming in. Now, they're not done with their stimulus measures. It's certainly something you're going to want to keep your eye on. They've been doing stimmy, and they're going to continue to do it. This was supposed to be a pretty good size package. They just completely fumbled it. So we'll see. A lot of times they respond to that. We've seen it happen before when they fumble it and they say, well, wait, we'll do another event over the weekend. I think they did that like a month and a half ago, right? Where they came out and it was really disappointing. So they planned something over the weekend and came out with another package. So with those China ADRs, I still say we're too early. The big event is in March. So, let's get into December, at least maybe into January before we start seeing much out of those China ADRs. So the top 3 names on the list here, they're all China, emerging markets, FXI, and then KWEB. That's all China stuff. Solar, it's getting whacked with yields. We've seen TLT is up, so bonds are up, yields are down, solar's down. Surprise. Silver, gold, precious metals, all getting whacked. It kind of makes sense. So we've got the dollar kind of flat to down, VIX down, yields down. We're going to see gold, silver, precious metals down. Now, speaking of that, though, we started talking about having a correlation with the dollar yesterday, right? This is coming back again. We had it in 2021. Foreign capital coming into the U.S., buying up the dollar, basically currency conversion. They were buying up a lot of U.S. companies. So the NASDAQ and the dollar both pointed higher all the way up into 2022, December of 21, January of 22, then it all ended. So if we're going to reconnect with the dollar like that, that's something that we could see for today that might help us out. It's worth keeping an eye on it, right? Because we're kind of flat this morning. It's kind of flat this morning. Maybe we can get a little help that way. It's going to take a while, though. If we recorrelate with the market, with the dollar, the way we were in 2021, it's not going to just flip a switch happen overnight. Cloud also down, but cloud's one of those that really just gets like a little algo print. We're not really seeing much flow there at this point. You keep your eye on it, see if it actually starts to get some flow. And then those energy names that were getting a little bit of love yesterday. On the other side, we got pot stocks, bonds, and that's it. That's where the cutoff is, 0.5%. We're not going to rally with pot stocks and bonds, right? So watch the clock. Keep your eye on that market maker move. Look for 0-day flows. If we're going to get any kind of galvanizing breakout Sally run to the upside, then it's going to have to come from news or 0-day flows. Otherwise, we're expecting to hold the range, keep our gains, go into the weekend nice and quiet. The only thing that I see that can break that argument and actually send us to the downside at this point would be negative news coming out. We can't predict negative news. So keep your eye on finance juice. Be careful. Be safe. I'll see you all next week.